and you decide that, wow, I really need my staff to hear this, or I need to use this as follow-up training for a new CA who's going to be doing my billing, whatever the case is, you'll be able to use this in perpetuity. Once I have taken care of the recording and I've converted it, I will send a link to Dr. Fennell to give to you all so that you can have this recording for as long as you need it and as long as it's current and it's relevant. So we're going to go ahead and get started. Again, my name is Lisa Majeski, and I am the president and founder of Gold Star Medical Business Services. We are, as Dr. Fennell said, we're a full-service medical billing, compliance consulting, and a productivity consulting firm. And we love to work with chiropractors. That is my main clientele. I've been in the chiropractic field since 1982. So probably I've been around longer than some of you have been alive, and I hate to even say that, but it is the truth of the world that I've been around a long time. I've been in the chiropractic field for over 36 years, and so it is a pleasure to talk to you today. And we're going to be talking about a really important topic when it comes to the insurance billing and revenue cycle management process. And I think this is an area where a lot of offices really drop the ball. Billing CAs will drop the ball because they simply do not know how to effectively analyze an EOB when it comes through the door. And so we're going to be talking about a very small piece of revenue cycle management, which is in the EOB analysis, and what to do with an EOB once you have received it. So let's go ahead and get started. So essentially, let me see if I can get my slide to move. We're going to be picking up the piece of revenue cycle management from the point at which the claims are coming back to you. Now, I have a whole presentation on filing claims and billing out claims and getting claims, vetting them and making sure that they're, that they're accurate and that they're correct before they go out. But we're going to assume now that all of these claims have been filed from your office, and now they're coming back to you, and you have to decide, or your billing staff is going to have to decide what to do with it. Okay, and the first thing that you need to understand is what an EOB is. What is a remittance advice? So essentially, what happens is when you submit a claim, you're going to receive an RA or an EOB, and we'll be calling them RAs today, which stand for remittance advice, that explains the payment and any adjustments made to a payment during an insurance carrier's adjudication of claims. So the RAs are going to provide your itemized statement of the decision that the carrier has made regarding the claim you submitted. And they're going to make a decision on the explanation of benefits. So the RA, you're going to find out what they paid, whether there was a deductible or a copay or a cost share on the patient side that needed to be applied, if there were any adjustments or write-offs to that claim that need to be taken. If a claim was denied, the RA will generally explain why that denial took place. If there's missing or incorrect data, the RA can tell you that. If they are taking money back from you, sometimes you will see the RA show a refund or a recoupment in a claim. And also you may see other amounts taken as claims withholding due to secondary payers or penalty situations. And we're going to look at all of these elements of an RA here today as we go through the class. The RA provides you and the patient with a justification for payment, as well as the ability to then take that information and input it into your accounting system or your practice management software. And it allows you to manage your accounts receivable and your general ledger applications. The codes in the RA will also help you identify any additional action that you may need to take. So, for example, some RA codes may indicate that you need to resubmit the claim with corrected information, or others may tell you that you can appeal a decision if there was an adverse decision on a claim. Now, one of the things, and we're going to talk about this more extensively later on in the class, but if you decide that you are not going to participate as an in-network provider on some insurance plans, you need to be aware of the fact that you may not receive an RA under that circumstance. And the thing is that carriers are not obligated to send remittance advice to out-of-network providers. And so we're going to talk a bit more about that as we move forward. But keep that in mind as we're talking about remittance advices today. So RAs are available in basically two formats. You can receive an RA in an electronic format, and that's called an ERA, electronic remittance advice, or a paper format that you get in the mail, and that's called a standard paper remittance advice, or an SPR. Although the information is similar, okay, the ERA, which is the electronic remittance advice, is going to offer certain functionality that would make it easier for you to post those payments back into the practice management software, and also allow you to possibly use that ERA to appeal a claim electronically. So one of the things that I recommend, and I know that there's some doctors who are a little bit of holdouts on this, they want to get their EOBs or their RAs in the mail because they want to see them coming through. And I totally get that, but it does take more time for your staff to post a paper remittance than an electronic remittance. And also it uses up, you know, our natural resources. So if you're wanting to go green, you're definitely going to want to go with an electronic remittance advice. But the electronic remittance advices are going to be the way to go. And also the electronic, and I'll give you some more examples of what you can do with an electronic remittance advice. So first of all, with an ERA, you're generally going to receive your claim information, your adjudication of that claim faster. If you are electronically billing out a claim and you receive an electronic ERA, there are some carriers like Aetna, for example, where you're going to receive your EOB back in a matter of days, and it could be anywhere from 2 to 3 days that you would receive your ERA back. So you're going to get paid a lot faster if you sign up for ERAs. It also allows you to electronically post. Most of your software programs have the capability to allow you to grab an electronic ERA and automatically post it back into the patient account, which saves scads of time in staff hours in just posting payments. And one of the things that I hear a lot from chiropractors when they're talking to us about doing billing for them, or you know, or I'm consulting with them on their in-house billing and their inefficiencies and inadequacies of the in-house billing, is that it takes their staff so much time just to post the payments that they don't have time to follow up on claims. And so one of the ways that you can drastically reduce the amount of time that you're spending doing pay posting is to subscribe to electronic ERAs with as many of the insurance carriers as you work with. Of course, it lowers your operating costs as well. It allows you to create some great reports, usually out of your clearinghouse and your software if you're using the ERAs. Many ERAs allow you to pinpoint a search. So if you have a big bulk ERA and you're just wanting to look for a particular patient, you can usually do a search in an electronic ERA, and it'll take you right to that patient's adjudication. And then it allows you to export data to other applications. And so it gives you a lot of versatility versus the standard paper format. Now, what information are you going to expect to see on an RA? The RA provides you detailed payment information about a healthcare claim and describes why the insurance carrier may have paid the total original charges in full. The codes that are on the RA help you as the provider and your staff understand the actions that the carrier took while processing the claim and identify any additional action that may be necessary. So some of the things that you will be able to discover on an RA is if a claim was denied. if a claim was not paid, like you received a zero payment, or you received a partial payment or a reduced payment. Maybe a penalty was applied to the claim, or there is additional information about the payment, or a supplemental payment was made. All of that information you can find on an RA. Now, under the RA, you have what are called medical code sets. And medical code sets are clinical codes carriers will use to identify what procedures, services, supplies, drugs, and diagnoses that pertain to a beneficiary encounter. So, you know, I mean, if you've done billing, what you can see is that you bill out a claim and you bill it out in code, right? You use the CPT codes to let the insurance company know what services were performed. You use the ICD codes to let them know the diagnosis and justify medical necessity. If you're in dental or in pharmacy, you can use the CDT codes or the NDCs, which are the national drug codes used for pharmacy billing. But for chiropractic, we would deal with, on the outgoing side, meaning the claims going out to the insurance company, we'd be looking at CPT codes and ICD codes and modifiers to explain to an insurance company what services were being done and why, and what the value of those services are. Well, when the adjudication of that claim comes back to you, it also comes back to you in code. And so the CPT codes will be listed very often, maybe the ICD codes, but not usually. But the explanations as to what was paid and why are also going to be in code. So it's very important when you're analyzing EOBs to understand what these codes mean, because depending on the remittance advice codes you receive on an EOB, that is going to then tell you what your next steps are in processing or appealing that claim if necessary. The non-medical code sets that we look at on ERAs are referred, there are two types of code sets. One are the claim adjustment reason codes, which are CARC codes, and then you also have RARC codes, which are remittance advice remark codes. And we're going to talk about both of them. So CARC codes essentially provide financial information about claims decisions. The CARC codes will communicate adjustments that the carrier made and offer explanation as to when the carrier pays a particular claim or service line differently than what was on an original claim. And, you know, one of the things that you'll begin to see is that most of the major insurance carriers use a standardized code set. They use standardized CARC codes. The organization that maintains the CARC and RARC codes is the Washington Publishing Company, or WPC, and you can actually go to WPC, WashingtonPublishingCompany.org, I believe, and print up a complete list of CARC and RARC codes. But in all honesty, for most of you in chiropractic, you're only going to see a certain ones most frequently. And so you're going to learn what those codes are, and you're going to probably have them memorized the same way you have CPT codes memorized. The remittance advice remark codes are a little bit different than the CARC codes in that they further explain an adjustment or relay informational messages that the CARC code can't express. So, for example, if a CARC code like a CO16, which is a claim that lacks information for adjudication, you might get that on your EOB. You might get a claim that's been denied, and the CARC code is CO16. Well, the RARC code that accompanies it will tell you what the missing information is. So that kind of explains to you the difference between the CARC and the RARC codes. And we're going to show you a few examples of this. The other type of codes you might see are the PLB reason codes. The PLB reason codes describe adjustments the carriers make at the provider level that has nothing to do with the patient benefits. And this might be if the carrier makes a late payment to you and pays you interest. Go figure, they actually have to do that. they would put a PLB code letting you know why you got paid that extra $1.50 on that particular claim because they're paying you interest on it. Or if you have, on the flip side of it, if you have recoupments going on where you have money being taken away, there'll be a PLB reason code letting you know why that recoupment is taking place, and so on and so forth. And so those are going to be your PLB reason codes. So common CARC codes, the first thing you're going to notice about a CARC code is that it's going to be a number, a two or three digit number, and it is most often going to be preceded by 2 letters, and these are the most common of the letters that you're going to see in front of a CARC code. These are called claim adjustment group codes, and this is attached in front of a CARC code to indicate the responsibility, the party's responsibility to that code. So if you see a CO dash and then the code, the CO means contractual obligation. So that is saying that that is a write-off that you're supposed to take as part of your contractual obligation to that particular insurance carrier. Now, the tricky thing about these CO denial codes, or these CARC codes that are preceded with a CO, is that even though it says contractual obligation, the contractual obligation isn't always to write it off. The contractual obligation may be to resubmit, okay? And so just because one of the most common rookie mistakes a biller is going to make is that they're going to see an EOB with a denial that says CO something, and they're going to think, oh, that's a contractual write-off, and it's not always that way. CR would stand for corrections and reversals. OA is other adjustment. We're going to show you what that might consist of. PI is a payer-initiated reduction. In this case, it doesn't mean personal injury, but a payer-initiated reduction. And PR stands for patient responsibility. So it's very important to understand when you're looking at your denial reason codes on an EOB that you have a very clear understanding of who's responsible for the remaining balance on that claim and what do you need to do about it. So here's an example, and you see the numbers to the far left, 1, 2, 3, 4, and it starts with that, and it goes up to, I mean, there are literally hundreds of CARC codes. But the most common one, the number 1, always refers to a deductible amount. So what you may see is on an EOB, and we'll see some examples of this, you may see a PR1, okay? And the PR1 is patient responsibility 1. That means that the patient is responsible for a deductible amount. And then the EOB or the RA will tell you what that amount is that the patient is responsible for that you're supposed to collect. And hopefully you already have collected at least some of that, or if not all of it. PR2 is a co-insurance amount. PR3 is a co-payment amount. So anytime you see those CARC numbers, it is more than likely going to be preceded by a PR, patient responsibility. Now CARC number 4 basically says that the procedure code is inconsistent with the modifier used or required modifier is missing. So if you see a CO4, contractual obligation -4, that means that you have a contractual obligation to either fix this, resubmit the claim with the corrected information, or if you're not going to do anything about it, you're going to write it off, and you cannot ask the patient, just because that claim was denied because of an incorrect modifier, you're not going to be able to transfer the responsibility of that claim to the patient. You'll have to make your due diligence to fix that and get a correct denial. A couple of other examples of CARC codes. 11 is the diagnosis is inconsistent with the procedure. So you may get a CO11, meaning that your diagnosis code is not valid to the procedure that you're billing. The next one, which is the CO16, is one of the most common denials, rejections in medicine, not just chiropractic, but medicine. And this is one that states that the claim or the service lacks information or has submission or billing errors which is needed for adjudication. And one of the things that you need to understand clearly about the CO16 denial code, or it's actually not a denial, it's a rejection. And the difference between a denial and a rejection is that a denial is a claim that has been adjudicated by the insurance company. They've received it, they've accepted it for processing, and now they have denied it for whatever reason. A rejected claim is a claim that has been received by the insurance company, but they look at it and they immediately see missing information, and so they're taking it back. If you have an EOB or EOBs that are sitting on your biller's desk with CO16 denials, the clock is ticking for timely filing. So what that means is that in the eyes of the insurance company, that claim has never been billed. And if you have timely filing requirements, like United Healthcare has a 90-day timely filing, and you have either rejections at your clearinghouse, or EOBs that come back with a CO, or RAs that come back with a CO16 denial, and you haven't done anything with it, and it's 4 or 5 months down the road because you're so overwhelmed with all the work that is, that has to be done, then you may not be able to get paid for that once you do finally correct whatever is wrong with that claim. And again, as I mentioned earlier, under the CO16 denial, you'll also want to look for a RARC code that will usually accompany that, letting you know why that claim was denied for missing information. It will actually tell you what the missing information is. It might say something like missing rendering NPI number, or it will say missing diagnosis code, or it might say there's a number of reasons why it could be missing. Most of the time it's usually a missing NPI number, or a missing tax ID number, or missing facility, something like that. The 18 is usually an OA or other adjustment, and that is the duplicate claim. So anytime you see an EOB that has the CARC code of 18, the OA 18, you're looking at a duplicate claim. And if that's the case, then you've got to do some investigating and find out where that original claim is so that you can properly follow up on it. And so on. So you can look at the different ones. One of the ones that I most hate to see on any EOB is 29. That's the one that tells us that we've passed the timely filing deadline, and those are very, very hard, if not impossible, to appeal, because if they have a hard timely filing rule, most insurance companies will simply not pay those claims if you have exceeded the timely filing deadlines. Some RARC examples, okay, and again, you'll notice that the RARC examples are almost like modifiers on a claim, where it's going to give you more detailed information about that particular claim. So the M14, for example, would say no separate payment for an injection administered during an office visit, and no payment for a full visit if they only received an injection, et cetera, et cetera. So, and every one of them is going to be different. Some are going to pertain, obviously, to chiropractic, and some of them may not. So you do need to look for the RARC examples to get further clarification as to why your claim was denied. So now, once you receive an ERA, what is the steps? What do you need to do once you've received an RA or an EOB or an ST, or a standard paper format EOB? What you're going to do is you're going to post, first of all, if you receive an electronic remittance advice, you want to learn how to and begin to post the information automatically for individual claims in the RA to the appropriate beneficiary accounts. And this is called an 835 remit. And so what happens is, once the insurance company has processed the claim, they send the ERA back to the clearinghouse that you submitted the claims through. They'll be found there. So your biller would go to the clearinghouse every day and look for new ERAs. And if there's a new ERA, then they will automatically post it into the practice management software and take any action on anything that was not paid correctly. Make sure that when you are automatically posting those ERAs that you still put your eyes on it, because there may be reasons for denials or adjustments that you're going to need to follow up on. So you can't just post it and write it off and, you know, and be done with it. You still have to really observe what you're looking at on the ERA to see if any additional action that needs to be taken. If you are receiving your payments automatically, electronic funds transfer into your checking account, you want to make sure that you note the date that a payment issued with the ERA is scheduled for deposit, and verify that that deposit actually made it to the doctor's bank account, or arrange for a deposit of a paper check if necessary. So you may find that after you've posted an ERA that the next step is to submit a secondary claim. And so you do need to be aware of the fact that many of your patients may have 2 insurance plans, and if that's the case, then after you have processed and posted the primary payment or the primary ERA, then you can go ahead and submit that information to the secondary payer. Most payers now allow you to submit secondary claims electronically, and so if you use electronic ERAs, it's very easy to submit electronically secondary claims. If not, you may still have to go the old school route of printing up a paper copy of that ERA or remittance advice, printing a paper claim, and then sending those by snail mail or faxing them over to the carrier for the secondary billing. And so kind of depends on your software and on your ERA capabilities and your clearinghouse capabilities. But nowadays, 95% of the clearinghouses do have a feature that allows you to submit secondary payers electronically, which again saves a tremendous amount of time. Secondary billing is one of those real time-consuming, tedious things that most billers hate to do. They usually save them up and do them once a month because it's just such a hassle. And it takes so much time to gather up all the EOBs and print the paper and stuff the envelopes and take them to the post office. And so if you can do it electronically, again, it'll be all that more time that your staff can be spending following up on unpaid claims or on doing reactivation calls or helping you with marketing or whatever the case might be. But you want to try to avoid them doing that, you know, that kind of grunt work, time-consuming, tedious work, if there is a more efficient way to go. If you receive your SPR, your paper EOB in the mail, you definitely you're going to have to post it as well. You want to post those SPRs manually into your accounts receivable or into your practice management software. You will want to use it to correct any errors that you may have encountered during claims processing, and of course build secondary healthcare plans that may cover the beneficiary. I always get the question about how should I post payments? Should I post payments by the claim or should I post by line item? And the first thing you're going to have to do is you're going to have to check with your software program to see if your software allows you to do line item posting. Now, line item posting is for me, the most accurate way to post payments to patient accounts. And essentially what that means is that, let's say you did a 98940 1-2 region adjustment, a 98943 an extremity adjustment, and you did a 97014 E-stem on a patient. Okay, those 3 codes. And you billed out $50 for the spinal, $40 for the extra spinal, and $15 for the E-stem. So that's $90 and $15, $105 total. And you receive a payment back from the insurance company of $80. Okay, in bulk claim posting, you would post the $80 to that claim for those 3 dates of service. So you billed $100, you got paid $80, and then you would post that $80 payment. In line item posting, the EOB would break down the payment by, okay, so of that $80, 35 of it was for the 98941, 25 of it was for the, or 30 of it was for the 98943, and then the remaining was for the eSTEM, okay? Now, it is more tedious to do it that way, but it gives you some great benefits. Number one is it allows you to run your report at the end of each month that show you how much you're actually getting paid for each service code you bill. Okay, and I have doctors who ask me that question all the time. They'll say, well, you know, is Blue Cross paying, what is Blue Cross paying me for 97110? What is Blue Cross paying me for 98943? How much am I getting paid per line item on the average? And if you have a software program that allows you to do a code usage report, you will be able to know exactly by the CPT code and maybe even by the payer what they're paying you. So then you can decide, well, is it worth it for me to stay in network with this payer? Am I getting paid enough to meet my expenses for this particular service line? Or do I need to do something else? You know, if I'm hiring a CA and all I'm doing is, you know, back office CA, and all I'm doing is eSTEM, and I'm getting paid $7 on an eSTEM, $7 to $10, would I get paid more if that CA was doing therapeutic exercises with my patient versus eSTEM? Okay, and these are questions that if you perform the services and you do your line item posting, you can gather that information and gather those statistics. And so it also helps you explain to the patient more accurately why the insurance, what the insurance paid and why. So, you know, you can tell the patient, well, they paid this much for your spinal manipulation, they paid this much for your extra spinal, and they paid this much for your eSTEM. Okay, and so it allows you then to talk to the patient. Another thing that you must be mindful of is that many of the RAs you receive are going to have no payment at all. They're called zero pay RAs. And it is vitally important that you post zero pay RAs. And I know this happens a lot more than I care to share with you. But what happens a lot of times is that staff people get overwhelmed with the amount of work they have to do. And so what they do is they get an ERA and it's a zero pay, and they say, well, I'll do that one later. It's not affecting my stats. It's not affecting the doctor's stats. It's just a zero pay. Okay, and they put the zero pays aside because the zero pays usually are the ones too that are going to require some follow-up. And so they put those zero pays aside. And then all of a sudden they come, you know, a doctor contacts a company like myself, Gold Star Medical, and says, you know, I have this enormous accounts receivable and I don't know, you know, why the insurance isn't paying, and and I've got all of these outstanding claims and I don't understand. And what we find many, many times when we take over a new doctor's account is that there were all of these zero pay RAs that were never posted. And so the problem is that because they were not posted, the money that was owed on those zero pay RAs was not turned over to patient responsibility and pulled off the insurance AR. So it still looks like it's outstanding, but actually it's been processed. And so if you don't post those zero pay RAs, you're going to have an accounts receivable that's out of control, and you're not going to be able to have a good indicator of what the patient balances are. Okay, make sure that you post those zero pay ERAs along with the contractual write-off and move whatever remaining balance is necessary to the patient responsibility. Now, another thing that you need to be aware of when you're posting RAs, if you're looking at a remittance advice and you see something wrong and it's like, wow, I'm going to have to call the insurance company on this, or I'm going to have to appeal this because they've denied it for medical necessity and you know that you can get paid for it, or they've denied it saying we need additional information like doctor's notes. Well, now you have this EOB, and the question is, what do you do with it? Do you post the zero pay and then move everything over to patient responsibility? You really don't want to do that because the claim is still ongoing. And so in that case, you want to look for a place within your practice management software in which you can pend that claim or put it into a disputed column. So And then what you do is every month you make sure you run those disputed claims reports and look for claims that you're doing follow-up work on. So you still haven't moved it to patient responsibility, but you don't want to post the zero pay yet because it's not quite ready to be moved over to patient responsibility. And so you do need to remember that, though, once you have completed the dispute, that you move that claim from the disputed claims over to either patient responsibility or post a payment after you've submitted, the information that they need to the insurance company. Sorry about that. Another thing that I want to talk to you about is if you're out of network. This poses a particular challenge to you with respect to EOBs. And one of the things that you are going to be challenged by is the fact that even though you're out of network, many carriers, and I put some carriers here, but actually it's many carriers, will display on the EOB what's known as the UCR amount, which stands for usual, customary, and reasonable. And it usually is the in-network allowables. So what will happen is, as an out-of-network provider, you know that when you bill your fee, you're not subject to the fee schedule because you don't have a contract with that insurance company. So you're expecting to get paid based on 100% of what you bill, okay? Now, the insurance company may send a remit back to the patient and to you that says $100 billed, $85.50 allowed. And you're going to be, and then there's going to be the remaining balance is going to be what they call a reduction. Okay, it's not a not allowed fee because they're going to have to, by the contract or the non-contract, they have to process it at 100%. But what they're doing is they're showing the patient what an in-network doctor would have charged them. And they tell the patient that, sometimes it even says it on the EOB for the patient, and it'll say, if you had seen an in-network provider, this is what you would have been charged. Okay. And the other thing that you have to remember is that as an out-of-network provider, when you see those differences between what you billed and what they're giving you as the UCR, or the usual, customary, and reasonable fee, that's not a write-off. And if you have a staff person that doesn't understand which plans you're in-network on and which plans you're out-of-network on, they may be writing off those amounts that you're wanting to collect from the patient, okay? So make sure that your billing department knows which plans you're in and out of network with. Now, the more dangerous thing about being out of network is that some carriers will not even send an RA to you as an out-of-network provider. And that goes for Blue Cross Blue Shield in most states. Not all states, but most states. If you're out of network with Blue Cross Blue Shield, you won't get an EOB. So if you're billing claims for the patient as a courtesy to them as an out-of-network provider, you're not going to have any way to track whether those claims are getting paid or not. So you have to be very, very careful in your collection procedures with these out-of-network plans, because what you should be doing is you should be, the ultimate of an out-of-network doctor would simply give the patient the service. The patient would pay for the service out of pocket, and then the doctor would give the patient a walkout statement, and the patient's responsible for filing it themselves. An out-of-network provider, you can do that. As an in-network provider, you must file for the patient. Another option would be to take the payment up front and file as a courtesy to the patient, so you let them know, okay, we're not going to make you self-file. We'll file for you, but we do require payment up front. And then on the claim form, you mark no under the accept assignment. So if there is any reimbursement, it will go directly to the patient and it won't come to you. I do not recommend, as an out-of-network provider, that you both accept assignments and bill out-of-network claims. I feel like you're trying to have your cake and eat it too. You're trying to get a higher reimbursement rate, but it poses all kinds of problems, and it's much, much harder for you to manage your accounts receivable as an out-of-network provider if you are billing and accepting assignments, okay? Because some carriers actually don't even have to honor the acceptance of assignment. Even if you've marked yes, they can still send a check to the patient. So it's fraught with a lot of danger when you're out of network and you're trying to play the in-network insurance game as an out-of-network provider. If you do it right, your money is protected. Basically, you're going to treat the patient as a cash patient. They're going to pay for their services. You're going to give them a walkout statement, and they can deal with their insurance company. That's the best way to do it. The other way, the hybrid, is they pay for the services. You go ahead and bill for them as a courtesy, but you don't accept assignment. You let them deal with the carrier on whatever they reimburse the patient directly, okay? So what we're going to do now is in the remaining time we just have a few more minutes, and then we're going to open up for questions. We're going to do some EOB reviews. And so this is actually an example of a Blue Cross EOB, okay? And you will see that the information you're going to, on just about every EOB, you're going to see information across the top of the EOB in columns, and then underneath is going to be the information. So starting at the top, let me get my drawing tool going here. Up at the top, you have, for example, the REND Prov, that's the rendering provider, and their NPI number is going to be highlighted here. And of course, I've de-identified all of this for HIPAA purposes. The serve date is the date of service, okay? The place of service sometimes is listed, and the type of service. And then you have the procedure code, okay? And then you have mods, which are modifiers, okay? And then you have the billed amount, the allowed amount, whether any of the amount went to deductible, if there was a co-insurance, and then the GRP code are your RARC and your CARC codes, and then the RC amount is the RARC CARC amount, okay? And then the amount that the provider was paid. So let's just take a look at this one claim here for this patient. They billed a 72010-52. That 52 modifier was not necessary on this particular claim because the 72010 is a single view x-ray. The amount billed was $79. The amount allowed was $47.37, and then the $47.37 went to deductible. And then the remainder, the difference between the $47.37 was a CO45, okay? And so if you see CO is contractual obligation, okay? And 45 is the charge exceeds fee schedule maximum allowable. And generally what you're going to see is when you get an EOB, you're going to have, in a bulk EOB, most of the time you're going to have all of the claim information, and then at the very last page of the EOB, all of the reason codes will be listed. And so this, actually the section that's in yellow here is on the last page of this particular EOB. So essentially, this is a charge exceeds fee schedule maximum allowable or contracted legislated fee arrangement. And so what you would do is you would want to just verify that the write-off plus the deductible amount equals the billed amount, and it does. And so in this case, you would post a zero pay because the provider was not paid anything for that service. You would post a $31.63 write-off, and then you would move the $47.37 over to the patient responsibility. If the patient made a payment, then you would simply apply whatever payment they made to that toward that $47.37 to zero out the balance on that piece of the claim. The next code was a 97014, which is electric muscle stim, and there was a PR55. I find this a very, very interesting code because PR means what? Patient responsibility. But here's what the 55 said. It says treatment is deemed experimental/investigational by the payer. This changed to be effective 7/1/2010. Procedure is deemed experimental investigational by the payer. And so you look at that and you say, well, the payer, we've been doing eSTEM since Moses. eSTEM is a standard therapy code for the chiropractic profession. And so It most definitely is not experimental or investigational, but they are making it patient responsibility. So, you know, what do I do with this? Do I just put it over to patient responsibility and make the patient pay for it? Or do I figure out why the insurance company is saying that it is experimental or investigational? And what I would do is the latter, because you need to know what to tell the patient. When they say, why am I paying for this service? Then, you know, you would want to tell them that your carrier is telling us that this is experimental. One of the things that we have found with this particular code, though, is that the 97014 code is often considered experimental, but if you reprocess it as a G0283, which is the equivalent HCPCS code that Medicare recognizes, it would get paid. And so in this particular case, that was actually the case here. We contacted the insurance company and they said, well, it's not really experimental. Basically, the insurance company didn't have a good explanation to give us, so they put something in there. and they said, if you use when we asked them, is the G0283 code a usable code? They said, yes, it will be paid if you reprocess it with that. So then we were able to do, on all of these claims, a corrected billing and get the 97014 code paid under the alternate HCPCS code. And so the next one is the 99203-25, $69, and $69 was allowed. Now, as a biller, I find this very interesting because they allowed the full amount. So what does this tell me as a biller? What it tells me is that you're charging too little for that 99203 code, because if they're paying for the entire allowable and you're a contracted provider, you may be undercharging for that code. You always want to make sure that your codes, when you're billing them out to an insurance company, if you're contracted, that you're having to take some kind of an allowance, even if it's just a couple of dollars, and you take a couple of dollar write-off. At least you know that your fees are exceeding the fee schedule, so you can get paid the maximum on that particular carrier's fee schedule, okay? And so what you will see is then you will see on the claim totals that $206 was billed, $152.45 was allowed, of which $83.45 went to deductible, and then $78.55. Well, and that doesn't necessarily mean that all of this is a write-off, correct? Because you have some of them that are PR and some of them in here are a contractual obligation. But if you took the $44, okay, that was paid, plus the contractual write-off amount, plus the deductible amount, it would equal $206 that was billed, and that's how you balance these claims. Another one that I'm going to look at with you here very quickly, and then we're going to open this up for some questions, is another area of concern on this particular claim was on the second one with this 99241 code. Now, this is a consultation code. And if you look at the billed amount, it was $52. The allowed amount was $49.69, which is fine. But when you take the PR3, and PR3 is a copay. Now, generally, when I look at a copay, I'm looking for a fixed amount like $25 or $35 or $30. Okay, so that seems curious to me as to why they're giving a $27.16 copay amount. All right, and what else is very curious about this is that when you add the $24.84 plus the $27.16, it adds up to the $52 and not the $49.69. So there's something wrong with this. I don't know, within this amount of $27.16, there is a write-off that needs to be taken, a contractual write-off, okay? But we don't know what that breakdown is, because the only explanation they're giving us is a PR3 as a copay, and that can't be. So I have to call the insurance company now and find out what that breakdown is, because they did not process that correctly, okay? So this is just one example of, you know, of how you would analyze an EOB for processing and for payment. The next one we'll show you very quickly is, try to get, oh, I know what I need to do. Get down to my pointer, and there we go. This is a Medicare, I'm sorry, this is a secondary payment. So on the secondary payments, you're going to get something like this, an OA-22, and this amount that you're seeing, oops, let me go back up. This amount that you're seeing under the RC amount is the amount that the prior payer has already paid, and then the remaining balance is being paid by the secondary payer, okay? And then typically you're going to see a Medicare EOB looks something like this, where you've got a lot of gobbledygook. You're going to have literally explanations all over the place. You have them here, you have them here under remark codes, you have them here, and so it's going to be very, very important for you to understand what all of this means within the processing, and then alert yourself to anything that is not paid correctly. And you can see that this was paid correctly because any of the non-covered services went to patient responsibility. The 98941 was paid correctly based on the Medicare guidelines. And then you had some reductions as part of the federal sequestration amounts and the PQRS reductions. And so essentially this claim was processed correctly, but you would need to ascertain that by the information on the EOB. Okay, so that finishes us up with the actual presentation, and there may be some questions that some of you may have. I'm going to open up the chat box and see if anybody has typed anything into the chat box. Oh, here it is, chat. Okay, I don't have anything in the chat box. So what I'm going to do right now is I am going to unmute everybody. Do we have any questions with respect to the presentation today? No? Maybe? Now, if any of you, I'm sorry, go ahead. If any of you do have any questions, I'm having a hard time hearing. Okay, I was having a hard time here. I don't know if somebody was asking a question or if I was hearing myself back on the presentation, but please remember, if you do have any questions, any further information, or you need advice about an EOB that got paid or didn't get paid, and you've got any questions, you can certainly, let me exit this, take you back to the very top of the presentation. All of my information is found right here. You can feel free to take my information down, give me a call. And again, this has been recorded, so you're very, very welcome. I think that was Dr. Fennell. He just lost his phone, but thank you so much for letting me present to you today, and I hope to present here again in a few more months. And if any of you have any suggestions, or you have any special requests on a topic that you would love to have me speak on, please let Dr. Fennell know, and he can relay that information to me, and we can come up with a good game plan for you. So again, thank you so much, and God bless all of you. Have a wonderful rest of your day.